Start again, Pete.
Okay.
That didn't go out live.
Okay.
All right, we're live now.
That's the lead-in music, I guess, for today's show, Pete. Can't touch this, or something like that.
Can't breathe this, can't touch this.
Can't breathe this. By the way, Pete, you know that is how the coronavirus is passed, is by breathing, according to Dr. Osterholm.
Yep.
He says, yeah, you could touch it. Unlike the song that was playing, you could touch it and get it. But he said, more than likely, you're going to inhale it. It's going to get into your lungs through just the air.
Yep.
And being in proximity to somebody who's got an active virus, who is infected and is basically hot.
Yep.
I'd encourage all of you, by the way, not just because Pete's always touting Minnesota, but Osterholm, Dr. Osterholm is one of the recognized experts in virology, in infectious disease and so forth. Pete, I don't know if you knew this even, but you know, he's a big Lyme disease guy. Did you know that?
I did. Okay. The only thing I'm disappointed in is I don't know that I agree with his assumptions and how he views Lyme, but that's a different topic altogether. But I certainly, you have to respect this guy. And what I like, John, listening to him on Joe Rogan's show from just the other day and getting an opportunity to kind of hear how he voiced this whole thing. He's not an alarmist. He's not a guy trying to get fear in the world and panic and all that. But he's a guy who's just giving you the straight down and dirty of, here's what we've got here. Here's what's in front of us. And I think it was great for people to hear not only that, but also hear about what is the effectiveness and why would you have a mask and those kinds of things. And it all makes so much more sense now when you hear somebody who's not trying to fearmonger, but they're just trying to help everybody out in terms of like who's the most susceptible, and there's a list. And then it's just amazing all of the wrong information we're hearing from so many others, where it seems like this makes total sense, and it also makes even more sense on why this is pretty dangerous, because it's less about the touching and a lot more about, hey, it's in the free air. And he compared it to, okay, well, how do you stop the wind? Right. That was one of his comparisons. You really don't stop the wind. Well, when people are in close proximity, they're breathing the same air. And, that's kind of the gist of how he was describing it, and how it isn't as much about touching things as it is about breathing. But that is why I think that we probably haven't seen the worst of it just yet. And I think that here in the US, we'll see more and more and more of this, although, we are a country that seems to adjust really rapidly to things. And I think we eventually will adjust at least a little bit to what's going on, but it doesn't mean it's not going to be painful.
Quite true, Pete. Well said. I would encourage everybody. We'll put a link up after this, folks, to that Joe Rogan interview with Dr. Osterholm. Again, Anthony Fauci, Dr. Fauci is one of the experts on this subject as well. So we're not, taking any of his credibility or other away. I'm just saying that Osterholm and Fauci both seem very dialed in to what this is and how you have to deal with it. And, I'll kind of leave it at that, I guess, Pete, but let me, since you talked about breathing and so forth and events being canceled, we know NHL games have been postponed. We know that the NCAA men's and women's tournaments have been canceled. Put an X through them. They're done, not delayed, done. Quick question to you, as a guy who is in the final running for a athletic director job at the University of Minnesota, do you think they will negotiate it all as far as giving any of those athletes another year of eligibility?
I think they might, John. I've actually watched a lot on this whole topic, and I think there's a chance that for some of the athletes that would want to, they would sort of, kind of bridge the whole thing. So it wouldn't really impact the scholarships and all the rest of that. If you were on scholarship, you're still there. The new guys coming in on scholarship, they'll still get their scholarships. But, it's also one of those things that's the disappointing part for me, John, is I understand we want everybody healthy. We don't want anybody to drop dead. We don't want anybody to even get sick if we can help it. And I think if I were one of those folks voting, I would have said, hey, let's do this. Let's suspend the tournaments. Let's suspend, like they've done with some of the professional sports. Let's suspend this. And maybe you say out at least a month, and we have the option at some point in time, and there's a great possibility that we could cancel it. That's where the way I think it should have been probably handled. That being said, yeah, John, it's a shame for those that would maybe have wanted their opportunity, and quite honestly, you just never know. It's why it's March Madness. Who's going to get where? Who's going to get that opportunity? And it's one of the fun things. But I do think we got to be safe, and I think that would be a pretty interesting and not that difficult for those that wanted to participate. Should still be able to get some form of participation probably for next year.
I think you're right. I think we're likely to see it, Pete.
Yeah.
And I would be happy for the athletes if it played out that way, because too often, there's a high school athlete, Pete, and all of a sudden there's a work stoppage. Teachers have a strike or whatever, and all of a sudden an athlete that was being looked at because he didn't get to, or in the case of she didn't get to finish her season, cross, soccer, football, whatever it might be. That always has seemed like something really, that's not fair, not right.
Right.
Not that life is always fair, but that's certainly something that, causes me to go, maybe they could, tweak this a little bit.
Yeah.
So that, the people that have made those sacrifices can actually reap the rewards of their hard-earned, credibility as a elite athlete or whatever it might be.
Yeah, and it's something, John, that we're seeing right now in the NFL, because quite honestly, everybody knows that they had the NFL Combine that's already been gone and come and gone. So that's gone. But how about all the mini combines that they do all around the country that are going to be getting canceled? And some of them already have announced, hey, we're not going to do it at Florida State. Hey, we're not going to do it at this school and that school. And, those are the guys that people haven't heard of, that didn't get invited most likely to the Combine. And so it's their opportunity. So this is, to your point, it's unfortunate because it's kind of a missed opportunity unless there's some way they can sort of shake things up a little bit, move the draft around in terms of the time frame, maybe, so that there can be more analysis. The reality is most of these guys are already knowns to those in the football world, but it's the opportunity for these guys to show exactly who they are and what they are, and maybe they stand out. And so because of being who they are, they're a guy who maybe would have gotten the opportunity to be drafted in the third round rather than being a free agent or whatever it might be. But it's amazing how much this is going to affect things. I saw Kenny Chesney just canceled his U.S. Bank appearance here in Minnesota. That's not scheduled, I don't think, till either late May or June or something like that. So it shows you how far out this really extends in terms of the precautions, which makes sense when you listen to Dr. Osterholm and some of these others that, this is probably not weeks, it's more of a months type of a thing. And that's why you were talking about, we've talked about the U, the bottom. Mm-hmm. That's probably why it does look like a U, because this is probably a little bit more prolonged than many think. And it's the 5-day incubation and all the rest of it. And, it's something that we're all going to have to deal with, obviously, as a country. And unfortunately, let's hope the death rates aren't nearly what some of the projections look like.
Yep, let's hope. Pete, let me switch gears a little bit because I told folks when we were going to be doing this that we'd talk a little bit about who might get bought out. In other words, a lot of stocks became very, very cheap. Yeah. I'm not saying that you or anybody else necessarily agrees with all of this, but I think we might see some of these stocks get to be in sharp focus again. And part of that is because at zero interest rates, which we're rapidly heading towards in the United States, there are people pricing in 100 basis point cut next week, Pete.
Yeah.
even though you and I might not think that that's really the significant driver. And nonetheless, people are probably, thinking that the Fed owes them that.
Yeah.
And for whatever reason, the Fed seems to be really panicked by the markets here. What do you think about the possibility when you've got private equity firms like Blackstone, BlackRock, individuals like Warren Buffett, who we know he runs money for Berkshire Hathaway? It's not just his money, but a lot of these folks have hundreds of billions. In some cases, at least one of those firms I named has over $1 trillion in cash.
Yeah.
Now, what do you start seeing that committed to? Because I've got an idea right here, Pete, that I would push, and that is, let me see if I'm going to share a screenshot, Pete, first of, let's see, where we go. Do I go to the whiteboard here, Matt? Because that's what's popping up there. Or let's see, how do I pull that bad boy up?
Well, while you're pulling that up, I'll just say this, John.
Okay.
I think it's pretty amazing that not too many weeks ago, Warren Buffett, January 7th, people were talking and they were going through his whole laundry list of, like they like to do, about what does he own, what does he have, where is he invested, and how much cash is he sitting on. To your point, he was catching a lot of flack, quite honestly, for the fact that he was in so much cash. I think suddenly Warren Buffett gets back up into that high pedestal of why he was sitting on 130 billion, and his concerns about the market being a little bit inflated. And you and I have talked about this for quite a while. It's amazing. The people who liked Microsoft, who didn't like Microsoft as an $80 stock, a $90 stock, a $110 stock, suddenly loved it at 150 all the way up to 190.
Right.
And then suddenly you start getting some of those kinds of pullbacks. But the reality is, a guy like Warren Buffett seeing exactly what you and I tried to convey on CNBC a lot, which is, hey, look, suddenly Microsoft is trading in the 30 plus PE category, and other names as well, that had gone from being relatively inexpensive, or at least in line, to being very expensive. Those adjustments, and you got to respect the Oracle, because he stood strong and didn't do a whole lot of investing other than some of what he was doing in some of the categories. But I'll let you take over now, because we all see Boeing up there, and I know where you're going with this.
Yep. Folks, I respect the heck out of Warren Buffett, and I love to imitate him. And Pete, I must say in all humility, I have one of the great Warren Buffett imitations of all time. Well, Pete, if I were to go out and spend, some of these billions that are sitting around in my account, why wouldn't I, just like when I bought Bank of America when I was in the bathtub, why wouldn't I all of a sudden say, you know what? I really like the idea of buying Boeing. It's a monopoly, for God's sake. I mean, there's only two in the whole world. And if I buy Boeing, I don't even have to buy the whole company. What if I just call up, the CEO and say, hey, you know what? You just drew down $14 billion in your credit line. What if, just for the sake of argument now, what if I were to give you another 14 billion and you were able to maybe, give me a 12% dividend forever? And I could convert into stock at any time. How about that? What if I did that? And you know what happened, Pete? That phone call would be about 30 seconds from that point. The guy'd say, I'm connecting you with our investor relations department right now, Mr. Buffett. Let's write it up. Because they drew down the 14 bill. All of a sudden, Buffett says, here's 14 billion more. It's the same thing he did with Goldman Sachs, same thing he did with Bank America. Yep. And he says, I want a perpetual dividend. And I know I'm giving you an endorsement by giving you this money and making it public in this way. I think you survive. And I think that I like the idea of me being in here in a basically a monopoly, or a duopoly, where there's just the two of us. There's just Airbus and Boeing. And I think the stock immediately goes up from this level, Pete, as you saw. Take a look at here's the 5-day of that, by the way, folks. You know, the stock basically almost touched 150 yesterday. And today it's 165. This, you know, it was 240 a week ago, Pete. 1 week ago, it was 240. Taking it back a month, and, you know, you guys see that on your screen. It was looks like about 330, 335 a month ago. It's half of that now.
Yeah.
I think, Pete, a move like that would be a move that he could do broadly for the market, because everybody'd say, hey, look, Warren's back in the market. He's buying. What do you think?
Well, and on top of all that, John, with the figures you're throwing out there as possibilities, obviously none of us know anything about the detail of something like that if it were to happen right now. But yeah, think about that. And the support that he'd be giving to Boeing, I think that could be pretty spectacular. You know, the interesting thing is he just finished, and I said there was that January 7th meeting that they had. The quote that stood out for me with him sitting on $130 billion was, he said, I'm looking for another elephant-sized purchase. And when he said that, it was 4 years ago, he paid $32 billion to get precision parts. Where are they? They're in aerospace. What else does Mr. Buffett own? Well, let's see. United Airlines, Southwest Airlines, Delta Airlines. This guy has found an area that he likes. And the other thing about Boeing that maybe everybody doesn't really fully understand, but how it fits into the Warren Buffett, you know, we've all got our ways of looking at companies. And, you know, I always start with the CEO and the management. Do they have solid CEO and management that has been there and tested and all the rest of it? And then next for me is the fundamentals. And do they fit all the fundamentals? And lastly, where's the growth? Well, if you look at Boeing, I think the interesting thing that Buffett would tell you would be, well, he loves dividend yield. These guys have it. He loves buybacks. These guys have it. So the big thing would be, where is it relative to its peak earnings? Well, we know where it is now, and we also know the potential on a rebound of everything that's going on in this world right now, which I do think we'll have. We just don't know the length before that starts to accelerate back up. But I think one of the participants in that rebound would be a Boeing, because it's probably overdone. And, you know, when the shorts get a hold of something, John, and you and I know this, I mean, this is the most technically easy thing to see in the world, is the algorithmic trading that we see each and every day, both to the upside, so all those haters about this, to the upside as well as the downside. And all you've got to do is look at the final hour and a half of the day, or certain segments of the day, and the acceleration and the velocity of these moves has been absolutely spectacular. I mean, it's something like you cannot see. And it's for a variety of reasons. I talked about it in the take earlier, the uptick rule and these algorithms. That combination is a combination for exactly what we've decided stupidly to be, is a group of people, the SEC, and they've allowed this to happen because they don't want to do anything about the uptick rule. And by the way, these algorithms, they don't make markets, they're market takers. And by being a market taker, all they have to do, John, is ride momentum. And they ride the momentum until it slows down, and then flip it around and go in the other direction, or just pull away, right? I mean, it's actually like the stupidest game ever. And yet we have allowed it to occur for a long period of time, and it will. So should Boeing be trading where it is? Absolutely not. Have I bought any? Absolutely not. I haven't. And my reasoning would be, I don't know that we've seen the absolute lows, and I don't know what those lows look like, but you know, 150 seemed close, and we got down to 154 yesterday. But you know, at some point in time, if somebody like a Buffett were to step in and make that kind of a gutsy move, to your point, John, it isn't even that much risk for him. That's part of the amazing part here, is it's very similar to your point. Bank of America, Goldman Sachs, he's got these preferreds.
Hear that, Pete?
All of those things.
It's Buffett calling.
I did. My phone was ringing.
I have to call you after the stream, Mr. Buffett. You don't really? Pete, he says he'd rather we not talk anymore about Boeing today.
Okay.
All right. I got
That seems fair.
Be well. Thank you.
Well, but the other thing, the other thing that does stand out a little
God, he
bit for
won't
me as
stop.
well, John, is that, you know, when you look at the airlines and where he's positioned himself, he added once again fairly recently to Delta. So for those that think he's going to get shaken out, I'm not sure about that. None of us know, obviously, except Mr. Buffett, Mr. Munger. But the reality is that they, you know, he's positioned in these names, and they have enough in the balance sheets, I think, from what I can see, unless something's hidden that I don't see, to withstand what they're having to go through right now. And it will be painful, and they will have to sit down a lot of planes and all the rest of it that we know about. But the reality is what happens after that. And I think that there is great potential after that for upside in that area. But there's going to be pain along the way too, because it's never very comfortable to look at some of these names knowing that there's good potential to see significantly more downside before you start seeing the upside.
Sure. Well, let me take another battered one then, Pete.
All right.
What about the cruise lines? Now, I don't know that obviously that'd be Buffett could instead of giving 14 billion to Boeing and getting a special dividend and, you know, having a conversion into stock at a preferred price and all that kind of stuff, the usual Buffett negotiations. For that same 14 billion, he owns a cruise line, right? Because these have come down so dramatically. I mean, let me throw that one up, Pete, just for instance. CCL, Carnival Cruise Lines. Take a look at this bad boy, Pete. You know, here's that 5-day of Carnival. It lost 30% in a day.
Yeah.
You know, let's take a look at a 1 month of this one. Look at that, Pete. You know, February 17th or thereabout, the stock, you know, is trading 42. Now it's $16. I mean, that's nearly, it's not quite, I know, but it's almost 2/3 of its value gone. Now, gone forever? Or does somebody decide to step in and say, you know what? Does a PE firm, Pete, potentially say, well, I don't want to bet on a government bailout, but I do want to bet on this thing has now gotten so cheap that maybe we just buy and hold this damn thing and spin it back out a couple years from now. I mean, again, here's January of 18, Pete. It's a $72 stock.
Yeah.
Now it's $16.83. After Carnival may have done the right thing already, taken the ships out and basically saying 60 days, nobody's going out. We're cleaning these things top to bottom. We're not letting anybody on them. And then we're going to start selling again into the season. What do you think of that?
Well, I would have to agree with you. You know, it's amazing for the early parts of their sell-off. I didn't think as much about the Carnivals and some of the rest of the cruise lines, only because of the necessity factor. Airlines, there's a heck of a lot of a necessity to have airlines for business travel as well as all of the rest of the travel that exists out there. But this is fun, right? This is fun in the sun, and it's what supposedly the younger world does, which is experiences and all the rest of that kind of stuff. And obviously some of the older population that wants that experience as well. So, you know, is it a necessity? No. But when you get beat up that bad, I agree with you, John. You look out into the future, and I'm not talking about 3 months. I'm not talking about even maybe a year or two. It might take longer, but just on value alone of what they own, I would think that they're probably getting to that sort of a category. And that's what makes a name like that, you know, pretty daggone interesting for somebody with, you know, plenty of cash to deploy. If they can do that, it sure does seem to me like at some point, because as we say, if we're right and we get through this thing, and we obviously there'll be people that don't do well through it and all the rest of it, but those that are going to survive and do well, this certainly is a name that I think at some point in time this comes back, and people are going on cruises, they're going on their vacations, they're going on their trips and everything else. And certainly it seems to me like this is awfully oversold Doesn't mean it can't go lower, but when you're talking 16, I'm looking at 1683, right? At 1683, there doesn't feel like there's as much downside now. And this isn't like an energy company, like, when those concern me, John, because the Saudis are putting the pressure on oil, and they're okay with losing money if they can put everybody they're competing with here into bankruptcy. And that's a different story. I think something like this, there is enough of a fundamental side of this under the right circumstances, not under a pandemic, where they could do well again in the not that far out in the future, but it'll take a while.
Now, Pete, speaking of crude there, here's the XLE. Let's take a look at a 1 month of crude. That was that big, massive hit we took as Saudi did, as you say, they opened the spigots and just said, if we can't get a deal with Russia, we're just going to freaking pump like crazy. If you guys won't agree to cut, we're not going to be sitting around while you guys, reap more rewards than us. We'll just knock a bunch of you players out of this thing.
Mm-hmm.
So there's that big drop, Pete. Just in the last month from basically, even just right here, February 19th, it was $55. Now it's 29.87. So pretty darn low right here. I keep getting calls, Pete, from Buffett here. Mr. Buffett, I can't take your call right now.
Tell them you're busy. Well, John,
yeah.
When you look at that chart, it kind of says it all, but it also says the power. I mean, they felt probably like they were losing power, which I think they were, the Saudis. But so they made this extraordinary move to say, you know what, we can lose money longer than you can lose money. And they already had a lot of these, the beta names in the energy spot. We talked about those as great trading vehicles. We never talked about those being investment vehicles. We always would say, look, the beta names, you can trade them. And when you see that options that are trading in many of those various names, and they're trading at a 2 or a 3 beta to the price, it's amazing the movement that actually can occur for the option side of the world. And then eventually, obviously, that starts to dissipate. But that's kind of what we've been seeing. And I'll tell you, I think the strong will survive in the energy space. I think that the big names with the great balance sheets and all the rest of that, I think they can withstand this. But that next tier, that's the names that you just really wonder about. And the more I've looked into a lot of these beta names, John, and you're staring at them and you're looking and you're saying, well, unfortunately, you're seeing huge amounts of debt, very little cash flow, if any at all. And that's a pretty bad recipe in a situation where the price of oil has dropped to the levels where it's actually reached now.
Well, Pete, what do you think? Do you think we hold most of the 1,000? We're back to being up 1,000 now. Mm-hmm. We were up 1,300 early. We gave nearly all of that back. And then the market gathered itself again. We've got Trump speaking in 8 minutes, I think. So, that's the wild card, of course. We both know that. But what would you think? Do you think people are more willing to hold now after this massive sell-off? Or do you think people are going to be nervous into the weekend?
Personally, I think that the weekends do present a level of need for caution. So I guess by that, what I would say is my answer would be, yeah, we got this 1,000 points. It makes up half of yesterday. So could we hold on to it? We could. I think the most important part now, John, is something that Brian McCormick was pointing out on the blog, Market Rebellion, for unusual option activity. And this was great. I think, and I really think it really resonated with me, is he talked about, hey, look, it's not so much about the up and down of the market right now as it is, when do we start to see the movement itself start to contract? In other words, when do we stop having 1,500 point movement days and moves in between that 1,500 points that are as violent as they are? When do we start to see, like we are today, yeah, we're up, give or take, close to 1,000 points or whatever it might be this very moment, and that can change by hundreds of points every few minutes. but we had a little bit of that hiccup in the day where we sort of pulled back and we're barely holding on. And then we started to rise back up again. So we're still seeing enough movement that doesn't make it feel as positive. And I agree with Chris. You'll start to feel a little bit more positive about the market, I think, when we start to see that contraction of how big of a move that we're actually getting during the day. So will people feel comfortable enough over the weekend, John? I think what I've done, and I can tell you right here, and I've told the others that are on the blog and everything, I've got put spreads on in multiple different ETFs. And I'm normally not an ETF guy, but if I can get a 1-to-4 ratio and find put spreads where if I pay $1, it could potentially go as high as $4. If I can do that and I can get coverage in the S&P or the triple Q or the XLF or XLV, whatever you want, each sector, depending on how big my exposure is in each one, that's something that I've kind of gone through and I've got that exercise done. That's where I'm sitting in case we come in Monday morning and we see a market that looks a lot different than how it looks right now, which it looks pretty good today on a day where we're rebounding 1,000 points.
Yep. Well, hey, Pete, just like I said to Jenny yesterday, great job. Obviously, I think investors wanted to hear what you had to say and kind of, see what your mindset was going into the weekend. It is Friday the 13th. So I guess, at least so far, it's sort of been living up to its reputation among traders. Next week, maybe Pete will talk a little bit about, whether or not they reopen those floors, because that's been a scary thing since today is the last day that either the Chicago Board Option Exchange or the CME will be open for traders on the floor. They will still be open, folks, but they will be electronic trading. And you've heard us say it before, but you take the intermediaries out, you take out the market makers, and now all of a sudden everybody's just a taker. That's a different game, and that means more volatility. So we'll have to see, Pete, if these next 2 weeks, if we can survive the next 2 weeks without that, that'll be without the market makers. In a way, that'll be a good thing. But on another hand, it's going to create something a little worse next time we have a big disruption, because we won't have the people in between.
Yeah, absolutely. Agreed, John. Yeah.
All right. Well, folks, thank you. Tell your friends. We'll get some more live streams out next week. I hope you have a great weekend. Make sure you check out marketrebellion.com/Vegas 2020. We announced Tony Dwyer is going to be out there speaking with us, along with Bedros Keuilian. And every couple weeks, we're going to be announcing a new speaker, folks. And we've got a big one on the line right now that might be committing to us in the next couple weeks. And you just want to see exactly what's going on there, go to marketrebellion.com/Vegas 2020, and you can see all about it. Thanks very much, folks. I hope you have a great weekend, and we'll see you back here Monday.